Good morning, everybody. Hey, welcome to Friday. It is the end of the first full week of May, and it's been nice. We've seen a lot of green ink this week. The question is, can we end on a good note? We'll talk about that and more, and trade and tariffs when Dave joins us here in just a few seconds. Hey, don't forget, though, in this world, there's so many things that are out of our control, but you can take control of your investment portfolio by making sure the risk you have is the risk you should have based on your current circumstances. And that's why I developed the core retirement design to help people design that retirement they always dreamed of. Give me a call, 863-382-0037 to schedule your core retirement analysis. Hey, we got Dave coming up next.
Light FM. Train is there. Morning Dave is here. I appreciate you being here, too. It's 18 now before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. You do that. Then listen to us, too. It's 8:42, time to check in and find out what's going on money today. With the help of Phillip Statler from Statler Financial Services in downtown Sebring. Hey, Phillip, green ink yesterday again. Could we be on a winning streak?
Hey, it was good to see. I think we've been able to see green a lot this week. And the question is, can we finish up the week in green, Dave?
And if we want to get out of nuts flat on even for the week, we kind of need some more green because I think we're pretty close to the zero mark for the week so far.
Yeah, it's been a little up and a little down, but it's been nice to see the green ink. And, the only green ink I don't like seeing right now is oil.
Oh, yeah. By the way, the price of oil, I did a little research on that. The reason it's going up is OPEC is changing their production quota schedule. Instead of on a long-range plan, they're doing it month by month. So the futures we're looking at right now are June futures. They're betting after the drop in price that OPEC will cut production. That's why price of oil has been going up.
Gotcha. Okay.
Which actually makes some sense, I guess, from an investment standpoint. But I had to answer my question, why in the heck did it go up by 1.5%, by 2%? That answers it in a hurry. Back us up to yesterday. Donnie's looking for the truck keys. Is that what you're doing? They're on my key ring. I've been using it all week this week. This place is a little bit on the wild side at times. Yesterday it was green, 254 points up on the Dow, 32 points up on the S&P, and 190 points up on the NASDAQ yesterday. And that was on the strength of two good things that happened. Step number one, the announcement that we were actually dealing on an important level with the Chinese, and the fact that we signed a deal with Great Britain to make our more confiscatory tariffs go away, like their metal goods and whatnot. Needs to be noted, though, that at the bottom line, at the end of this big deal, tremendous deal, to use President Trump's term, we're still keeping the base 10% tariffs because you observed earlier this week, it's actually making us some money at that level, isn't it?
Well, that's right. And, remember, one of the things that was on Trump's agenda when he campaigned was tariffs would help reduce income taxes. And so he's looking at that as a revenue source so that he can continue reducing our income tax.
And if it's going in with the kind of money that he's reporting so far, if the tariffs actually hold, and we can actually walk away from a deal with a friend like Great Britain with a smile on our face and with them smiling as well. Like I said, I don't like tariffs, but if it's making us money and nobody's getting hacked off at us, what the heck, right?
Well, that's right. And so, yeah, I mean, it's still causing us to probably pay a little bit more, but it's in sense working towards a flat tax. I mean, it's not really a flat tax because it's consumption based, but that's what a lot of folks are looking at. I mean, you looked at the fair tax back, I don't know, 10 years ago, people were proposing the fair tax as a consumption tax. And that way you control what you pay, right?
Yep.
I mean, the stuff that you need as necessities, there was no tax or little tax on. The things that were not necessity, there was a tax on it. And so if you wanted to buy it, you paid the tax on it.
Yep. I've listened to the arguments on both sides of the thing. I'm not madly in love with the consumption-based tax per se, but I do like the concept of a flatter level of tax rates, and if this is going to help us end up doing it, I still don't like tariffs, but at the very least, I'm willing to listen. Other news came out, gave us a little bit of optimism as well. Those meetings with the Chinese honchos over in Switzerland that supposedly are starting this weekend. There's a little bit of gambit going on. Step number one, China released their reported export numbers. Number one, exports to the United States over the last month are down by like 21% coming out of China. That's not good news. Then the government comes up with their usual thing that always makes my bull crud detector go off at a loud volume. They said they still exported 10% more by just shipping it to everybody else. I'm not sure I believe government figures out of China, but there's no doubt whatsoever that 21% drop is probably a small number compared to what's really happening on the boats going out of China coming this way.
Well, that's right. That's China's. You and I talk about a lot how China, what they say and what really is happening behind the scenes is a lot of times it's two different things.
Oh yeah, double the bad news, and you're probably, if it's bad news, double the number, and you're probably looking at reality coming out of China. On the other hand, as an incentive to China, President Trump's been floating the notion of, well, maybe if they're nice guys, we'll just drop that 145% blanket tariff back to 80% as an opening gambit for the talks over this weekend. That kind of an interesting thought, and it didn't hurt Wall Street's feelings one tiny little bit, did it?
No, it did not. It was, it's got the futures and, trading in the green this morning. So, that's, and to a fair extent, that's pretty good.
We'll take green ink, like we've always been saying. There's always got to be one fly in the ointment, and Goldman Sachs was a contributor of a great big cockroach in the soup bowl this morning. They put out a quote saying that if the tariffs come back to the reciprocal levels that he was talking about, you can expect another 20% drop in the stock market. Thanks, guys. We appreciate it. About the time our humor improves.
Well, they want to keep you real and keep you ready for that next drop, which, I was talking to somebody the other day, it's like, hey, we saw this drop. We've seen this upward movement. You and I talk about, we expect another drop, right? Double, let's check the floor, make sure it's where the floor needs to be before we see a steady rise to the inside. So, we've seen a nice increase here and it's been good. But I'm ready for the other shoe to fall as well, thinking that, yes, we will see another test of those lows here at some point.
Because every single correction I've ever seen has always included a double dip, test the floor before we start going back up again. And so far, we haven't had that happen. Speaking of corrections, it seems to be out of the correction mode all of a sudden. Have you checked Bitcoin this morning? It's finally back up over $100,000.
Yeah, it's just made a huge jump here this last week or so. Yeah, trading at 103 right now, and that's not $103, Dave.
Yeah, that's making our friends at Coinbase a lot happier as well, with a bunch of other news of that company. Speaking of company news, we've got a few reports from the end of the day yesterday. Not a lot of big ones out this morning, but I gather a firm reported their quarter. How did they do?
A firm did report. They had an okay, I guess, fourth quarter or first physical fourth is their physical fourth quarter. Revenue was short of consensus. They also they're kind of in the midpoint of what they said they were going to be as far as guidance, which is, I guess, okay. But they're trading down this morning 6%. You got to think though, Dave, that a firm and the people that they deal with a lot of times, the debt reserves you would think would have to be going up some.
I got to believe that'd be a part of it, because I would expect in a tight economy with rising prices that a buy now, pay later business like a firm would probably be doing gangbusters in terms of gross dollars.
Yeah, I would think so as well. Hey, another one I had that was a little bit interesting is Pinterest. We talk about Pinterest off and on over the years, and Pinterest had I think their first quarter was a little off. They missed on earnings. and they beat on revenue. So the big deal is their current they're basically mid quarter right now, and they gave an update on their second quarter revenue forecast, and
Mm-hmm.
it was a lot stronger than expected. And so they're gangbusters this morning. They're up almost 12% this morning.
Wow. Yeah, it's one of those also rans in the social media that somehow has managed to survive against the big guns like Facebook, and they seem to always do okay in the worst case scenario. I don't understand it. I don't have a Pinterest account, but they obviously hang on there quite well, and they're in it for the long term.
Yeah, they're definitely in it for the long term, doing well. Hey, the other one I want to talk about is Expedia, the
Mm.
travel company. They're pretty well known. They're out there shooting for some travel and getting you to book hotels and cruises and airplane rides and all that kind of stuff. Well, they had a rough quarter on revenue. They missed on their revenue, but they beat on earnings. They beat by 8 cents a share. So it must be somewhere in the guidance. I think the
Mm-hmm.
guidance was a little soft for them because they're trading down 9.8%.
Oh, Lord. The swings are not small this morning, are they?
They are not. They are not at all.
Oh,
I don't
Lordy.
have the earnings for Lyft. I don't have the earnings for Lyft, but they are going gangbusters this morning because they increased their stock buyback plan by to $750 million. So it's got them bumped up 10.25% this morning.
I'll help them given the fact that if I remember correctly, Uber did not have such good news when they reported earlier this week, did they?
Yeah, they were off a little bit.
Yeah, it's kind of a zero sum between those two sometimes. Bringing back to yesterday, setting the table again, we were positive on all the equity markets yesterday. It was actually a pretty good day. 45 minutes before we opened this morning, how are we looking?
Well, it's green, Dave. It's given up a little bit since we got on the radio this morning. The Dow is up a quarter of a point. The S&P 500 is up 1/3 of a percent, and the Nasdaq 100 is up 4/10 right now. On the other side, we've got silver making a jump up almost 0.5%. Gold's getting close to 1% up. Crude oil is off its high from earlier this morning. It's up 1.9% right now, Dave, at $61.04, which is good because it was up to like 62.50.
Mm. Come on,
Yeah,
get it with it.
exactly.
Get that monthly production quota out, OPEC, so we can start trading down again. Overseas markets is curious. Evidently, the Chinese traders looked at that Chinese export report and said, yeah, bull crud, because the Chinese mainland markets both were down quite a bit this morning at the close. Japanese markets on the rumors that we were talking productively to Japan were up by like 1.5%. Over in the European community, it's pretty much solid green ink on optimism of our deal with Great Britain. Average European index halfway through their trading days about 0.5 point up, and it's pretty much across the board on Europe. Somebody wants to figure out how to make this all information that can help your retirement. You probably want some expert eyes. How do I find your eyes to get my retirement on track, Phillip?
Dave, that's why I created the Core Retirement Design to help people design the retirement they always dreamed of. They can give us a call at 863-382-0037 to schedule their core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And I will wish you a great weekend, and we'll talk to you next week, my friend. Thank you.
Have a great one.
You too. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us. Have a great weekend. I'll talk to you again next week. Bye now.